Thursday, the 14th of April. Welcome to the program, Business Incorporated. I am Boston Amofaye, the channel's global headquarters in Lagos. Let's get started. Coming up in the next 30 minutes, the International Energy Agency says the oil market is already rebalancing, and this weekend's Doha meeting will not change much in terms of crude market oversupply. And oil prices fluctuate downward today on the latest IEA's report, trimming its forecast for global oil demand growth. Plus, the International Monetary Fund says more needs to be done to ensure global financial stability. Negative interest rates are net positive for economies where they are deployed. Now look at the program. Let's start from the world of oil. The International Energy Agency, or the IEA, says a prospective deal to freeze oil output at a meeting of producers in Doha this Sunday will not change oil markets, which have already started to rebalance. Russia and Saudi Arabia, the world's top oil exporters, are set to meet with other oil nations on April the 17th, hoping to reach an agreement to cap their supply level in order to revive oil prices. But in its closely watched oil market report, the IEA says any deal struck will not materially impact the global supply-demand balance during the first half of 2016. Looking at the markets now, where the Asia stocks held on to gains on Thursday following the positive trend from the U.S. on Wednesday, but European markets started to fluctuate in early afternoon today. South Korea has returned from a public holiday. At the end of the session, the Kospi index closed higher 1.75%. In Japan, the benchmark Nikkei 225 index ended the session higher 3.2%. That's the highest closing level for the index this month. In Hong Kong, the benchmark Hang Seng Index added 187.7 points, and the mainland Chinese market, the Shanghai Composite, was higher 0.06%. In Australia, the benchmark S&P ASX 200 closed up 1.3, running off 3 days gain. Avi Aguedes is the DWTV financial correspondent for Channels Television, live to us from the Frankfurt Stock Exchange. A very busy day in Europe, not just from the earnings, but the Bank of England deciding to leave interest rate unchanged at 0.5%, one of the lowest in many years. But let's get a sense of where the markets are heading today. Avi, good afternoon. Thanks for coming through to us on the program. We've heard from the Bank of England, Mark Carney, about interest rate direction, but it looks like Brexit is growing stronger ahead of the June 23 decision. So how much of these BOE's decisions today will be subject to the headwinds from the, referendum on June the 23rd?
Hi, Bosun. Well, in reality, we know that the possibility of a Brexit is one of the biggest threats to the economy, not only in Europe, but worldwide. It has even been mentioned by the International Monetary Fund when it downgraded the global outlook for the economic development in the world. However, that being said, the Bank of England still has to support the economy no matter what the decision is. So it is needed to, to complete and continue its plan in order to shore up the economy in the United Kingdom. That is probably not that dependent on whether there is a possibility of a Brexit or not. That being said, the reality is that in the markets and in the financial world, I would say nobody really is counting on the United Kingdom leaving the European Union. And you know why I know that? Because if you take a look at the betting, similar to sports bets, there are bets, as you know, that always measure the impact of elections or of referendums. And if you take a look at the bets, at where people are actually putting money into, well, then the difference is quite clear. 70% of all bets are assuming that the United Kingdom is going to stay in the European Union, and only 30% are there betting for an out option. So unless that changes, I would pretty much assume that the financial world in general is not really counting on the possibility of the UK leaving the European Union.
Yes, so for now, we can all have a bit of a breather, as it were, looking at that 70%, if that's what the opinion poll and what the outcome of the referendum will be on June the 23rd. But right now, I'm just looking at the Frankfurt index just across the shoulder. Things faltering a little bit there, a bit of a fluctuations. Where is the deceleration coming from? Is it from the first quarter earnings, Burberry, Bank of America, Deutsche Bank, oil markets now heading south with a statement from the IEA, or the currencies, the dollar coming all the way around and hitting oil and metal prices? Javier.
Well, you know, as usual, it's a combination of many different factors, but first and foremost, you have to take into consideration that yesterday at closure here in the DAX in Frankfurt, we had a surplus of 2.7%, which is quite strong. So sustaining those gains is really not that easy, especially considering that the DAX broke the psychologically important 10,000 mark. That is also difficult to maintain. So the fact that we are seeing the market in the green is already, let's say, quite good news. On top of that, it is true that just before the latest numbers from China came in yesterday, the outlook was not that good. People were expecting bad results of the corporate reports of the different companies. People had seen that the IMF, as I mentioned, had just downgraded the global outlook for the economy. So in general, there was not much to celebrate. And now that we know that the oil output freeze agreement might not even take place, because there have been some words by the Russian Ministry for Energy stating that he is not certain on how that is going to look like, which basically is not sending that much of a good sign. Well, the risk is that investors have been counting on an oil output freeze, and if that doesn't happen, we will see some very bad surprises in the markets. So that is why I would say that investors are more cautious now than they were yesterday and are waiting to see how things develop during the weekend.
Yes, during the weekend, and the weekend starts. Well, the weekend looks like it's starting from today in New York, where the U.S. presidential primaries and the debates has arrived. That's the home of Wall Street. So it looks like, well, tonight we all got to look at the TV screen and see how the politicians, the presidential hopefuls, are slugging it out. Is Frankfurt watching this very closely? Are they interested? Are you watching, Javier? Will you be watching?
Well, I personally watch it every time because I think that it is highly entertaining, as you know, and it is very interesting to see how that process goes. And I think that's the reason why people follow it here in Germany as well. We can definitely say that the USA are making this election extremely interesting, and everyone is holding their breaths. That being said, for the financial markets and from the perspective of investors, there should be no big surprises there. Everyone is counting on New York to go for Hillary Clinton, which, as we know, is pretty popular among investors and on Wall Street. So that should not be that much of a big surprise. We'll see how it goes. You know, nothing is written in stone yet, but of course investors want to know what the outcome is going to be. Remember that the possibility of a Republican candidate, for example, entering the White House in the next presidential cycle might have big implications on how the United States manages its trading policy. Things like the treatment of Cuba, which is going to be very important, and also the position on the free trade agreement with the European Union, which we know is supported by Democrats in general, but really opposed by Republicans. So it all has a lot of implications, and that's why we will all be listening very closely.
Yes, we will all listen very closely, and we'll get a bit some entertainment, as you put it, Javier. Okay, thank you very much for sticking around for today on the program. Javier Aguedas, DWTV financial correspondent for Channels Television, live to us from the Frankfurt Stock Exchange. When we return, oil prices head south today as the International Energy Agency trimmed its forecast for demand growth and says the Doha meeting on Sunday, well, not really a silver bullet. We'll be back in one.